China's second largest property group, Evergrande, is in deep financial trouble. Banks, investors, buyers and suppliers are all affected. So what would a possible collapse of this company mean for China and for the world? This is Inside Story. Hello, welcome to the programme. I'm Kim Vinnell. Fears that one of China's biggest property developers could default on its debt are rippling through global markets. The vast Evergrande Group has outstanding debts of more than $300 billion. Building work on many of its projects has stopped, and several investors have stopped getting paid. On Friday, the company entered a 30-day grace period to make an $83 million interest payment after missing a deadline. The default of such a large company would be unprecedented for China and could send the country's outsized real estate market into freefall. The firm's woes have been compared to the collapse of the Lehman Brothers group in the US that preceded the 2008 financial crisis. Evergrande's financial troubles are rooted in 2 decades of huge borrowing. The company took out several loans to rapidly grow its real estate portfolio and expand into other sectors like healthcare and finance. It made millions of people homeowners in China. Its projects sprang up in every province, selling apartments years before they were built. But in August of last year, the Chinese government imposed new borrowing limits to crack down on debt and rein in an inflated property market. With the coronavirus pandemic pushing down sales, the heavily indebted firm began selling off assets at large discounts. That further alarmed investors and sent shares plunging. Let's introduce our guests. In London, we have Gareth, Senior Economist at Capital Economics. In Beijing, Victor Gao, Chair Professor at Soochow University and also Vice President at the Centre for China and Globalisation. And in Old Orchard Beach, that's a town in Maine in the US, Adam Hersh, Visiting Economist at the Economic Policy Institute. A very warm welcome to you all. Let's start, it makes sense, in Beijing. Mr. Gao, how do you think this is going to play out? Is Evergrande destined to default?
Well, first of all, Evergrande's problem right now is one of the biggest financial problems in China for many years. And the company, which is one of the largest property developers and also diversified into many other sectors, has accumulated huge amount of indebtedness. However, allow me to emphasize that the debt incurred by Evergrande is mostly a debt in itself. It is not reproduced into derivatives, as what was the case in the Lehman Brothers financial crisis. In that sense, the Evergrande debt situation is very, very different in many, many important ways compared with the international financial crisis breaking out in 2008. I hope China will be able to put a good handle onto this major situation, either through bankruptcy or through major restructuring. And it is not going to be just one single restructuring, because Evergrande has operations almost everywhere in China. So on a provincial basis, you are talking about more than 30 provincial units of bankruptcies. So you are talking about a major financial situation, and I hope it will be worked out, even though it will be very painful in the process.
Okay, Gareth in London, I'd like to bring you in. Do you agree with that assessment? What's your take on where things are at now? I mean, Evergrande missed this deadline to pay this dollar bond coupon payment worth some $84 million. Obviously now there's a 30-day grace period, but what does that say to you about where this is heading?
Yeah, I think some kind of default of Evergrande and bankruptcy is almost inevitable. If it's struggling to pay these coupon payments worth tens of millions of pounds, it's got much bigger principal payments due early next year, which are kind of 10 times the amount. So if it's struggling now, I don't see how it's going to survive for much longer. I think the big question then is what kind of repercussions there are for China's economy and the world economy. I think the Chinese government, it'd be quite happy to see Evergrande go bust. It's made quite clear that it wants to inflict some pain on property developers that have been over speculating and breaking the rules. But it also wants to ensure that the Chinese economy and the Chinese financial system gets through this okay. So if they do allow Evergrande to get bust, expect a lot of support for the broader economy and financial system to make sure that we don't have a full-blown crisis.
Adam Hersh in Maine, we reported earlier about the huge borrowing that has gotten the company to this point. What other factors have been at play or are at play here?
Yeah, I think it's important to keep in mind that this huge over-indebtedness of Evergrande is a symptom of problems in China's financial system, and Evergrande is not the disease in and of itself. And we should be clear on what's happening. The financial distress that Evergrande finds itself in now is a deliberate choice of policymakers that began tightening down on property developers in the real estate sector last year, issuing the 3 red lines to guide the deleveraging across this sector. So it's very much by deliberate choice that Chinese policymakers and financial regulators are moving Evergrande towards this restructuring. I think the question that is out there is whether regulators really have the wherewithal to understand what all the linkages are, the counterparty risk, the contingent liability risks from a default or even an orderly workout of Evergrande's debts. And are policymakers willing and able to make the kind of tough choices that they've been putting off for decades while China has grown so overly indebted?
Before we move on, talk to me about some of those difficult choices. What do you mean by that?
Well, China's growth has really been driven by the real estate sector over the past couple of years, and the local governments, which have been driving a lot of off-balance sheet debt accumulation, particularly since after the Great Recession, are inextricably tied up with the real estate sector from the revenues that can be raised from land leases. So these kind of special interests have been successful in organizing to influence policymakers in Beijing against taking the kind of tough measures that are needed to bring China's financial system under greater prudential regulation, under greater control. And it remains to be seen whether policymakers at the center will have the political will to follow through in casting off the moral hazard that has been accumulating in the system.
Sure. Victor Gao, I'd like to get your reaction to what Mr. Hersh has said there. Is the situation that Evergrande finds itself in symptomatic of wider problems in China's financial system? What role or what responsibility should Chinese regulators, Chinese policymakers have here?
Well, first of all, I think the panelist was absolutely right. This wound, which is still developing, is very much of a self-inflicted wound, partially initiated by the Chinese regulators. For quite a few years, Chinese government has been talking about not plowing more money into the property market. They emphasize that the properties should not be for speculation. They should be used by the consumers, for example. And then over the past 1 year or so, the government has significantly cut down the access of privately owned property developers to financing of all kinds, driving up significantly the financing cost faced by many of these property developers. And then by imposing red lines, just now mentioned, the regulators, through new regulations, sometimes suddenly imposed, made the financing very, very difficult and at very high cost. Now, in the private market, financing probably will go up to about 15%, or even more than 20% on an annual basis. This is truly a very heavy burden for these private borrowers. And then you have a lot of third-party transactions. That is, one debt created another indebtedness, etc. So eventually you are talking about a whole chain of indebtedness from one party to another party to a third party to a fourth party eventually. So eventually I would say the restructuring of Evergrande, which is very big, covering several sectors, and even if we just talk about their property sector, they find themselves in operation with land possessions, for example, in multiple provinces, in multiple cities. So the restructuring will be a very complicated restructuring, and I think it will require a lot of wisdom and courage and vision on the part of the government regulators, and you are talking about the central government regulators and provincial government and local governments, as well as their suppliers, their financiers, including banks, for example. And the danger is that it breaks up and everyone just rushes in to carve out a piece for him or herself. And the one point which can make the a bite much less painful is to do a very overarching restructuring. Because if you look at Evergrande, it has several listed vehicles. One of them is actually doing quite well, whereas their main flagship listed vehicles are really tanking as we speak. So the restructuring part, either through bankruptcy or voluntary restructuring, especially involving the lenders and the financiers of all kinds, will be a very, very sophisticated exercise in order to minimize the cost to all the stakeholders.
It seems, Mr. Gile, like you have quite an optimistic view should restructuring happen. I want to come over to you, Gareth Leather, back in London. If Evergrande were to default, what flow-on impact would that have both in China but also internationally?
Yeah, it very much depends on whether they can contain the problems within China. I think one advantage of being a communist state is that you do have a lot more control over your financial system than, say, for example, the US did ahead of the Lehman's crisis in 2008. So it means, for example, that the Chinese government could force banks to continue to lend to each other, so you don't have this kind of the big crisis that you did back following Lehman's. That being said, you know, it's certainly possible with the Chinese government trying to inflict more pain on the property developers that they make a mistake that things aren't contained within China, that you do get a financial crisis within the banking sector, that you do get property developers going to the wall and people losing confidence in the property market and not buying property, and that you do get a big hard landing of the Chinese economy. Then I think there's a couple of avenues where other countries will be affected. First of all, you'll get big falls in global stock markets and a reduction in risk appetite. So countries that are dependent on capital inflows to fund their external deficits could get into trouble. Turkey's the obvious candidate here, but there's a couple of other places in South America. You'd also see big falls in commodity prices. So countries in Africa, Latin America, and also Australia would also be hit hard by that. And assuming that there is some kind of pass-through from China's property sector to the broader economy, then other countries in Asia that export a lot to China would also be affected. So it is potentially quite big if things do go wrong from here.
Okay, let's pause for a moment to take a look at how Evergrande's $300 billion crisis compares with other debt defaults. So in 2001, Argentina defaulted on a record $95 billion in sovereign bonds. Its economy shrunk by 20%, and that led to mass unemployment and riots. In 2008, the New York-based Lehman Brothers, as we've been saying, that investment company declared bankruptcy after owing $600 billion, and that led to the global financial crisis, which then caused Greece to owe about $200 billion to the EU and to the IMF. It was given successive bailouts. I'd like to come back to you, Adam Hersh, in Maine. We heard there from Gareth Leather earlier talking about the differences between Evergrande and the Lehman Brothers collapse. We have, though, heard European and US banks trying to reassure their investors that their exposure is limited. Is it?
Well, certainly the nature of China's financial system being relatively closed has limited the exposure to external players. I think that we want to keep in mind the political context under which this crisis is unfolding. Xi Jinping is preparing to do something that is unprecedented in the modern history of China, which is to stand for a third term as party chairman and president of China. And it's going to be essential for him in the run-up to the 20th Party Congress next year to continue demonstrating his position of control or perception of his control. And this crisis with Evergrande really jeopardizes that image that Xi Jinping is trying to project. Now, as they think about this, creates a great incentive for intervening and in the crisis and to make an example of Evergrande. But as with all financial crises, what we'll see is that the regulators, even if they think they have a handle on what Evergrande's financial positions are and the web that it's created with throughout the property and financial and non-financial economies in China and around the world, they really don't have an understanding of that. That's something we can take for granted. And so although there's going to be a willingness to intervene, there remains an open question whether policymakers, regulators are going to be able to do enough and fast enough to stop the contagion. Once Evergrande starts restructuring, real estate prices in China and across the Asia region are going to drop. And outside of Evergrande, every company that has liabilities backed up with real estate collateral are going to start to be seen as higher risk and undercapitalized. This is going to put a damper on accessing to credit for all kinds of firms. Households that have been in China that have been putting all of their life savings into real estate investments because there are few other options to save in China's economy are going to find themselves underwater. Just as China is trying to make the transition from investment-led growth to consumption-led growth, just as China is trying to launch a new campaign for common prosperity in the run-up to Xi's ascension at the 20th Party Congress, there's going to be a tremendous amount of political pressure.
I want to pause you there. We will come back and talk about President Xi Jinping's push for common prosperity a little later. But before that, I'd like to come back to you, Victor Gao. It's been reported that, in a way, this could have been foreseen. Reports that China, in essence, has two property markets, one in major cities where prices are rising, another in smaller cities where oversupply has led to downward pressure, and that perhaps Evergrande should have foreseen this. Do you see it that way? Could this have been foreseen?
Well, if you talk to different property developers in China, then they have sometimes very different philosophies and forecasts as to how the market will work out in the coming several years or coming couple of decades. On the other hand, I think the megatrend is that the Chinese economy is still expanding, urbanization is still increasing, and there will be, a need for additional houses, apartment buildings for the hundreds of millions of migrant workers who are now caught in between the urban side of the equation versus the rural side of the equation. Many of them have been working in cities for years, if not even for a couple of decades, but they do not have decent housing to speak of. They kind of cramp into rented apartments in a very crowded way. So the demand is there, and it depends on how the Chinese government, the corporates, the developers, etc., the financiers really come up with a more coherent view as to how much weight they want to give to property development. as I mentioned, the government in recent years has adopted a very negative view about property market. They do not want people to buy extra apartments, for example. They want to limit the lending to the buyers. They want to emphasize that the properties should not be used for speculative purposes. They should be used just for your abode or housing purposes, etc. So I think there is a lot that we can really rejuggle, given the need for greater urbanization in China, greater need for apartments and buildings of all kinds in China, but also they need to restructure what kind of properties they are talking about. And then I would say one major hurdle is that for whatever reason, right now, the access to finance by private developers is very much restricted, which in itself is very artificial. And I don't think this is normal. And I hope the government will pay enough attention that they should give equal access to privately owned enterprises or developers, as well as state-owned enterprises. The private developers should not be discriminated in terms of access to financing, to policies, for example. And in that way, the property market should be more normalized in a macro sense. And people can really expect to have stable property market rather than huge ups and downs in the property market. Because if the property market, which is one of the pillar industries in China, is tanking, the repercussion throughout the Chinese economy will be huge. And you do not know what eventually it will lead to and how much of a final blow it will inflict on the Chinese economy as a whole.
Absolutely. Gareth Leather, I'd like to come back to you on this idea or this thing that's being pushed by Xi Jinping of common prosperity, basically a crackdown to try and ease inequality by cracking down on technology as well as finance sectors, among others. Xi Jinping will want to soften the blow for small investors at least. Will Xi Jinping allow Evergrande to fail?
Yeah, that's a very good question, because this whole question, or this whole kind of crusade, as it were, about common prosperity doesn't sit very well with the state and much poorer taxpayers bailing out big property conglomerates that have got into trouble through speculation. So it's maybe another reason to suspect, another reason to think why the Chinese government is likely to go quite tough on Evergrande and not show much sympathy towards them. I think it does also bring into a kind of broader point about China's long-term economic trajectory, that many of the countries, most dynamic, most productive companies are these tech sectors which the government has recently launched a crackdown against. Now, if it's not prepared to allow these companies to prosper, to develop, to invest, as it maybe looked like the case a few years ago, then it does kind of bring into question kind of China's broader long-term outlook, that some of the country's most productive companies are being kind of stepped on hard by the government. So it may mean a more fairer society, but also means a less dynamic one, which probably means slower growth in the long run as well, I think.
Victor Gao, I'd like to finish with you in Beijing. A lot of people bought Evergrande wealth management products, promised big returns, sometimes approaching 12%. Are there going to be, however this works out, are there going to be a lot of individual investors, a lot of mom and pop investors, as they're known in the West, left out of pocket here, lost livelihoods, lost futures?
Well, unfortunately, there will be a lot of pain in the market because of Evergrande. If you ask me to speculate, I would say those who bought into the corporate bond by Evergrande of all kinds and different series, for example, most likely will suffer a big haircut. Many of its suppliers who own accounts payable by Evergrande probably will suffer another big haircut. Now, some of the investors who prepaid for their apartments in different parts of China, depending on which city you are talking about, probably will suffer a huge haircut too. And for those financial institutions, commercial banks in particular, I hope they are well protected by their discipline in lending to Evergrande to start with, and they will suffer, but they will suffer less proportional to other stakeholders involved. There are foreign lenders to Evergrande because their vehicle is listed in Hong Kong stock market. But I hope they are also well protected in the sense they use very sophisticated legal documents, try to identify where risks are and how they can be protected through pledges or guarantees, etc.
We will have to leave it there for time. My apologies. We will have to leave it there for time. Thank you very much for your analysis. A big thank you actually to all of our guests, Gareth Leather, Victor Gao and Adam Hersh. And thank you too for watching. You can see the program again anytime by visiting our website, aljazeera.com. And for further discussion, go to our Facebook page. That's facebook.com/AJ Inside Story. You can also join the conversation on Twitter. Our handle is @AJ Inside Story. From me, Kim Vinnell, and from the entire team here in Doha, bye-bye for now.